perspective, very quickly, what's the take like with regard to an L&T, for example? We've seen a bit of a rebound on the stock price. What are the levels you're looking out for?
No, very good morning, Harsh, and all the panel members. See, overall, L&T has seen a decent movement. In this week, we have seen nearly a kind of a 6% upside movement in L&T from a very strong support zone. And looking at the technical setup, there is positive divergence as well. So overall, there has been positive developments on the technical front for L&T on the chart perspective. Even on the higher end, I'm expecting that this kind of pullback can be seen or can be continued towards the zone of 3,800, which is the 200 simple moving average, and from where we have seen a breakdown in this counter. So that will be the initial target from a short-term perspective. While looking at the overall trend, still some kind of correction, some kind of profit booking should be or can be continued in the counter. So dip should be utilized. Near about the zone of 3,580, 3,600 is a very strong support levels. So that should be seen as buying opportunity in L&T. While on the higher end, 3,800 is the potential target that I'm expecting from very short-term point of view.
Okay, that's the take coming in from Osho. Kunal, let me switch to you. Infra overall and defense. Talk to us about what the view in those two pockets are.
I would still believe that there could be a little bit of more time which these stocks would probably take to try and form a bottom, because we've not seen the price movement for many of these names, infra as well as for defense names, to be at sync with the overall market. Because I think in the last couple of days as well as in the previous week, there was a phase where the markets or the indices had seen a decent bounce back in between. But even in those phases, we've not seen the kind of outperformance which was needed from these sectors. So that probably tells you that maybe the money flow or the fund flow into these sectors as well as into those stocks is not as strong and at par, expecting that the sector would probably have bottomed out. So that's what I would sense, that maybe I think it's a good time to try and just wait for many of these stocks over here. Price wise, they may be looking attractive, but it's just that with these stocks delinking themselves broadly from the overall market, especially in terms of the bounce, I think probably gives an indication that these stocks may take some bit of more time to stabilize. Okay.
All right. So that's the take. Neeraj, let me come to you with regard to, we spoke a little bit about infra, but talk to us about real estate as a pack. Is it looking interesting? Because what we are seeing is we've seen a very, very sharp downtick from the highs of 1,000 plus on the index itself. What next?
Yeah, I think real estate had been correcting much before this immediate problem, the war happened. I think last 1 year they've been underperforming. So this was because there was some slowdown. Prices had gone up a lot after the COVID. So 2002, 3 to 2004, 5, we saw a lot of price movement. So I think there was definitely some price correction, some slowdown there. So I think, but looking at the price erosion which has happened in some of the real estate names, I think one can, start buying them on dips, because I feel that some accumulation for 2 to 3 years period is warranted to some of the real estate names. So short term, I'm not sure that whether they can fall another 10% or not from these levels. But I think with a longer term perspective, I think one can look at investing in real estate stocks.
Okay. So start accumulating from a long-term perspective. Osho, do you have a view on Realty?
For Realty, there is a kind of a strong correction in the counter. There has been a breakdown for the Realty index. The 800 was a very crucial juncture from where we have seen a strong correction in the counter. And currently it is hovering below the short-term moving average. So one should wait for a respite on the technical perspective, that if it crosses the zone of 800, then from there onwards, we can see some kind of comfortable buying coming back in the real estate space. Or if there will be further correction, because the overall trend is very weak. From the last 4 weeks, the counter has been strongly into selling pressure. So either if this continues, then 640 on the technical levels will be a crucial zone. And from there onwards, one can look for accumulating purpose from medium to long-term perspective. So it is a conditional buy. Either wait for some kind of correction to continue, or if there will be any kind of revival in the coming period, then one can look for buying opportunity on the highs.
Well, this has become almost a daily affair now. The rupee has slipped to yet another record low. We've slipped below the 94 mark. 94.23 is the live rate on the rupee dollar. So So we're sliding at least on that count. We'll try to get a perspective on this because this slide has been extremely sharp and it's been extremely quick as well. Over the last quarter or so, the rupee has slid nearly 5% now in just a single quarter. And if I zoom in, maybe over the last month or so, a bulk of that depreciation has come over the last month. So pressure clearly mounting with regard to where the rupee is. But I'll switch focus. Semi-annual rejig for the Nifty is set to take place today. The index has no inclusions or exclusions. A couple of stocks will be in action due to weight changes. Nuvama expects Bharti, Trent, Union Bank to see the highest passive flows, inflows at least. Staying here to break that down for us.
Well, yes. So this is a note coming in from Nuvama on the back of the Nifty index rejig, and all of these numbers that we're going to talk about now are Nuvama estimates. First, the Nifty index semi-annual rejig is going to come with effect from today, and Nifty 50 index has no inclusions or exclusions, but there are weight changes that we've seen. Now, if you take a look at the overall broad Nifty universe, in terms of cumulative flow of all the passive indices, the top inflows are expected to be in Bharti Airtel to the tune of $249 million, Trent $177 million, Cummins India $90 million, Union Bank $75 million, and HDFC AMC $69 million. These are, of course, Nuvama estimates. Now, let's talk about Nifty Next 50. The inclusions now are Trent, Cummins, HDFC AMC, Muthoot Finance, Union Bank of India, and Tata Capital. And what they are replacing is ICICI Lombard General Insurance, Info Edge, Havells, JSW Energy, LIC, and Bajaj Housing Finance. So that's the Nifty Next 50. Shifting focus to the category of Nifty Midcap 150, the inclusions include MCX, ICICI Lombard, Laurus Labs, Info Edge, and Havells India. And these are the flows that are estimated to impact them as well. And on the flip side, in terms of exclusions, you have Cummins India, HDFC AMC, Muthoot Finance, Union Bank, and Sona BLW Precision. Now let's talk about the Nifty Small Cap 250 category. Inclusions have names like Sona BLW, Piramal Capital, and Housing Finance, both of them expected to see $12 million worth of inflows. Equity Knowledge Partners, IGL, and Tata Technologies are some of the new inclusions in the Nifty Small Cap 250. And what they are replacing, the exclusion stocks are MCX, Laurus Labs, Radico Khaitan, AIA Engineering, and Sundaram Fasteners, all expected to see outflows anywhere between $5 and $34 million. So that's a list of all the Nifty indexes rejig set to hit or come into effect and hit the street from today.
Okay. All right, Snehi, thank you so much for joining us and giving us that perspective. Let me go across. We have Navneet Damani on the Rupee, Navneet Damani of Motilal Oswal. Navneet, what's the sense like? We've slid and we've slid quite sharply over the last quarter or so. This is, of course, some bit of it is dollar strength, but it's also a plethora of factors which are playing against the rupee. What do you expect this slide to go to? I mean, because currently it's seeming non-stop.
Hi, good morning.
Good
We've
morning.
been witnessing that a massive round of depreciation has once again started in the INR. We've seen it fall from 83 to 90 and then consolidating for a while. And now we are seeing the next leg of fall towards 95, 96 probably. Largely for the last 7-8 months, we've seen dollar index and rupee being decoupled. But what suddenly has happened is the rebound in dollar index from 96, 97 level to 100 is where rupee started to move along or tandem with what the DXY is behaving. To top it up, we are seeing US bond yield rising to about 4.42%. Indian bond yields are closer to 6.8%. Inflationary concerns are kind of shooting up. And all this macroeconomic picture doesn't look very robust at this point in time. Crude oil prices have risen very sharply. So it is going to be probably not a rate cut kind of a scenario, but a possible pause and then a rate hike kind of a scenario, which is kind of having upper hand at the rupee at this point in time. So my sense is that since the macros are changing so rapidly and the war doesn't seem to be ending very smoothly and anytime soon, it looks like if the Brent crude oil prices is towards 110, 115 once again, there's going to be a massive round of impact on our balance sheets, which typically is getting impacted on the rupee at this point in time.
Okay. Navneet, thank you so much. Thanks for giving us that perspective. Near term, you're looking at 96 on the dollar. So thanks for coming in and giving us that quick view. Snehi here, though, with the big bold brokerage call of the day, of the morning, in fact. Mankind Pharma is in focus. Morgan Stanley initiates coverage. Overweight rating, 20% plus upside. Snehi is here to break it down for us.
Well, yes. So, in focus today is going to be Mankind Pharma on the back of a fresh initiating note coming in from the house of Morgan Stanley, wherein they've initiated overweight on the stock with a target price of 2,500 rupees per share. This target price implies about a 25% upside to the stock compared to where it's trading right now. So the note from Morgan Stanley says that Mankind and Torrent are both long-term compounding franchises within India's pharma market, but they prefer Mankind between the two because it has structural growth that remains supported by chronic therapies, pricing and new launches. Now, earnings recovery and BSV-led optionality along with supportive valuations, that all of these factors together lead them to prefer Mankind over the other players in the Indian pharmaceutical space. They say that Mankind is emerging from a period of execution reset and improving productivity and BSV scaling are driving an 11% revenue CAGR and an adjusted EPS CAGR of 25% over FY26 to FY28, creating a clear growth trajectory for the company going ahead. They're also saying that Mankind as of now trades at a discount from a valuation point of view, offering scope for earnings-led re-rating as the execution normalizes internally. The IPM growth in the overall pharma industry is expected to be between 11 and 12% over FY26 to FY28, and they believe Mankind can capitalize on this opportunity, and that's why they prefer Mankind given its better risk-reward situation compared to other pharma names. So that's a very positive note coming in from the house of Morgan Stanley on Mankind Pharma, target price at 2,500 rupees per share.
Right. The other floater, thank you so much for that, Sneh. The other floater, at least with regard to the rupee, is the fact that there's been that excise duty cut of 10 rupees on both petrol and diesel, which will cost the exchequer around a lakh and a half crore annually, which also means that there will be pressure on the Indian 10-year bond. We'll see and we'll track that play as well. Osho, very quickly, within the pharma basket, anything looking attractive to you?
Yes, pharma counters are looking quite positive. There are a few counters which have seen a decent movement in the last couple of trading sessions. The first one is Emcure Pharma. There has been a clear breakout in this counter. The counter has seen very strong breakout in the last trading session, and it is expected that it should continue its move towards the uncharted terrain. So I'm expecting 1660 as the initial target for the counter and 1540 as the stop loss. The other counter is Max Health. Max Health has also seen a kind of a strong rebound from very strong support level. So I'm expecting that this might continue. From a short-term technical pullback can be seen in this counter. So 1020, 1025 is the first target that I'm expecting in this counter. While on the lower end, 960, 955 is a very strong support zone. So that should be cushioning the counter, and that should be kept as a stop loss for short-term traders.
Okay, early indications, Kunal, seem to be suggesting a negative start for indices. Do you expect a reversal here?
Yeah, I expect some sort of recovery. I don't expect this 150 odd point, which is shown on the GIFT Nifty, to shape up. Expectation is that crude oil prices should moderate and at least come back towards 100, 102 levels. If that happens, I think we could be at a point where the index may stage a decent recovery at the second half.
You're expecting 23,000 to be held, Kunal?
Yeah, largely yes. I think throughout the day, I think 23,000 should be holding on.
And the Bank Nifty, underperform, outperform?
I think it should be at par performance.
Okay. Because I remember you saying that there could be a rally towards 55,500, at least on the Bank Nifty. You still expect that?
Yeah.
Okay. Very quickly, on the Nifty 50 index itself, 0.8% lower on the Nifty. So some bit of pressure creeping in. 200 points lower, even though Kunal has said and called out the fact that we might see a recovery on top of this. Again, the breadth looks extremely weak. The swing of breadth from extreme negativity to extreme positivity to extreme negativity seems to continue. What's trending higher? It's the IT stocks, it's Coal India, it's ONGC, it's those names, and NTPC. It's those names with a tilt towards energy, and it's those names with a tilt towards IT, which has always been the case where indices swing negative. Where the benchmark swings negative, we've seen IT and energy doing fairly okay for themselves. So really that swing continues, that contra play. Tata Motors PV is the big loser of the day with the factory shutdown in JLR hurting at least the returns today. Bajaj Finance is the other one. Eternal, Shriram Finance all down 2% plus. M&M is the other one, down nearly 2% in trade today to start the day off. We're 1% lower now on the Nifty 50 index, 250 points shaved off, but we're holding 23K. I think that's the real support level at this point. And that's something that we'll have our eye out on. 1.5% low on the Nifty Bank. So you're seeing some bit of underperformance playing out over there. When you're looking at broader markets as well, there is pressure, 1.2% lower on the Nifty mid cap as well as small cap indices. So a clear trend lower is what we're seeing. In terms of sectors, let me quickly pull those up. You had that screen in front of you. IT, oil and gas. So it's energy and IT as the tilt towards the defensives. The big loser is the Nifty PSU Bank. The Nifty Realty Index down 1.8%. The Nifty Auto Index down 1.5%, and the Nifty Metal Index and Banking Index also down 1.5%. So really, that's the tilt that we're seeing. In terms of just the contributories, there are no big negative contributories. HDFC Bank is contributing around 45 negative points, and Reliance Industries is the other big one, around 30 negative points. But outside of that, really, it's just the breadth which is pulling the Nifty lower. We're 1% down. We continue to hold the 23K mark. In fact, we're in around the 23,100 mark at this point. March has been a tough month already, 9.5% lower for the month of March alone. In terms of the market breadth, very curious to see what the advanced decline currently sits at. But there you go. So the advanced decline not looking pretty at all. 1:4 on the advanced decline on the Nifty 500. In fact, I believe that would be far more pronounced. And I'm just going to quickly pull that data point up. It is. It's 7:1 on the advanced decline on the Nifty 500. 430 declines to just about 60-65 advances that we're seeing at this point. Now, of course, we're 2 minutes into trade. Also, very quick first thoughts. What's your take?
See, again, this is a buy on dips kind of a market. So one should wait for first 15-20 minutes. And once the market stabilizes, there might be a strong opportunity from the counters which are outperforming. Like Pharma is quite outperforming at these levels. So one can look for opportunities in Pharma. The two stocks which I mentioned, they are already making a decent move, or they are having a kind of a stability at these markets. Even Sun Pharma is also looking quite positive on the technical chart. So one can look for opportunity in Sun Pharma. 1800 is the crucial hurdle, and if it crosses above 1800, then 1840 will be the next potential target. The other counter which are looking quite positive on the basis of news are the OMC counter. The BPCL, HPCL have seen some kind of a strong traction, nearly 2% higher. So one should again wait for the stability in 15-20 minutes. If there will be continuation on the higher end, then these counters can also provide a strong technical pullback from short-term point of view. So these two counters will be in focus for the day. And even after that also, we can look for buying opportunity in the market.
Okay. And also very quickly, some of the real estate plays, Brigade, for example, is up 9% in trade on the back of that, the new project launch that they've done, 700 crore launch with regard to their new project. What's the take there now? This move that we've seen in Realty, sustainable in your opinion, at least in a couple of those real estate players?
See, this is the first or initial signal of a reversal in these counters. So sustainability is still questionable, because in the recent period, we have seen rejections from the 50-day exponential moving average, and Brigade has again testing the zone of 50-day exponential moving average in today's trading session as well. So no doubt there is a kind of a reversal, and that has been backed by very strong volumes, but not to become very much aggressive and take complimentary bets in these counters. Wait for a sustainable move beyond the 50-day EMA, which is nearly 730-35 odd levels. If it sustains above these levels, then one may look for buying opportunity, but in a staggered manner. Do not be very much aggressive at current point of time.
Okay, don't be aggressive. Osho, thank you so much for joining us this morning, giving us your take on this very critical day. Of course, the Nifty trying its best to hold on, but we're down 270 points now. The Nifty 500, we're just about very, very weak on the breath. 1:9. One advance for 9 declines is what we're seeing at this point in Indian markets. And that's been the story, right? It's been the breadth. But let me bring on board Ben Powell, Chief Investment Strategist for Middle East and APAC at BlackRock Investment Institute, joining us this morning in person here in studio. Ben, wonderful having